March 1st, 2023, and it's Wednesday night, and we've got a fantastic group of folks with us tonight, and getting ready to start to end one part of our training and move forward into another. So this is a breaking point, actually a graduation night. It's the final part of the first 7-part series tonight, and so just glad to have everybody with us, and so many of you have been with us the whole way. Tonight's session is required, so if we can't finish it out tonight, try to come back and join us tomorrow night. I'm Steve Carver, speaking with you from Dunn, North Carolina, and so glad to be on board with all of you. I'm not a lawyer or an accountant, just a fellow that's been in business a long time, offering free advice, and the best advice is always to get several opinions before you make an important choice. And a good place to get help and second opinions is from your small business centers at the community college. We're sponsored tonight by the John Hardison, the director at the center at James Brunt Community College. His office is actually over in Warsaw, but we have webinars sometimes, seminars sometimes at the campus. And if you meet with John, you'd probably meet with him at his Warsaw office, and he would love to help you any way he can. So use your chat button. Let me know your name and your email address and where you're at, and any requests that you have, just let me know. So congratulations to all of you. We're going to talk about kind of wrapping up our first part of our series. And I'm so happy to tell you that so far since we started 7 weeks ago, we've had 84 people that have worked with us, both from the small business centers at Sampson and at James Brunt. So that's one of our largest crowds through the years, and so glad to have everybody. Our Wednesday night events, we have had 60 attendees, different people, and Thursday nights we've had 24. So Wednesday nights have been a lot more popular for whatever reason. And we've had 19 folks that have actually been back and forth, some attending some at James Brunt and some over at Sampson on Wednesday and Thursday nights. Now this is our last, tomorrow night will be the last Thursday night session for a while. So going forward, it'll be on Wednesday nights. You are the Academy of Entrepreneurs and Associates. It's a group that I started and keep up with in a way to help people think about tomorrow and work together in mutual helpfulness. I appreciate all of your effort, and as you pass your quizzes and do your homework and do your videos, you'll be qualifying to becoming members and associates of the Academy with just a whole lot of nice people that we still work together. Looking forward, after tonight, we're going to take a week break and have on March the 14th over in Kenansville, we will be having an in-person seminar, and very unusual that we do that, but I'm glad we are, because it will give us a chance to meet and greet and have a little snack or beverage. And the topic that night will be starting an internet sales business. So it basically we'll be talking about things that we all need to hear and do. And I really hope that we've got such a good crowd from the Dublin County area in Sampson that y'all will come over for that 6 to 8 seminar if you can make it over. And of course, I'll send you a reminder about it. And then we'll start after that with 5 Wednesday nights. And in each session, we'll be talking about 2 different topics. Most of the time they blend together, so we don't even have to stop. But this is the second half of the series training for another 10 hours. Now, if you have attended 5 out of the 7 classes we've done so far, and including the part 6 and part 7 tonight, and you do your homework, you'll qualify right now for your Academy graduation. But the good thing about it is, if you hadn't quite finished your homework or you want to do some more, all during this next 5-week period, you can turn your information in to qualify for your graduation certificate. And I certainly encourage you to do it if you'd like. A brief summary of what we'll be doing on March the 22nd. It'll be a similar program to tonight about tax planning, depreciation, deduction, and avoiding problems. And of course, that's right before that April 15th date, so it'll be right on time to help you if you're trying to figure out what to do with your taxes or you're thinking about it. On the 29th, we're going to talk about, that's the following Wednesday night, 15 businesses that you can start with $100 or less. And there, hopefully, you'll be able to find some good profit centers that you might add on to what you're already doing. And we'll finish up that session with a good focus on customer service, which really we've talked about how important customer service is, but during the series so far, I really hadn't given you any good tips on customer service. So that's why that night will be very important. On April the 5th, we're going to dive deep into forecasting and negotiation. We talked a little bit about it last week, and tonight we'll talk about them some more. But there's such important subjects, and I really hope you'll be able to tune in there and learn a lot more about how to forecast and how to negotiate. And then on over into April now, we're going to talk about how to find and keep the best employees, and also how to become a dream manager so that you can keep those employees for a long, long time. It's a very exciting presentation. And then we'll wrap it up on April 19th. That'll be the end of the 24-hour class that we all started back in January, wrapping it up with pricing strategies and little tips to help you conquer the competition. So even though we're finishing up part of our series tonight, we got a lot of work ahead of us. And whether you already earned your graduation certificate or not, you're certainly invited to attend all these as well. We've got over 22 stars. Over 22 of you are doing a great job towards getting your graduation certificates. And I'm just really proud of all of you to do it. And they include, now I'm sharing the photographs that y'all shared with me along the way. They include Tamika in Jacksonville and Vanessa in Spruce Pines over in the mountains in Burnsville area. Penny, who's with us tonight, shared such great videos and information. Just been a real shining star for our whole series tonight. And Penny, we appreciate your input. Kenny, who's been with us a whole lot, he must be on the road tonight. Got his own trucking company, got 2 trucks on the road. Tisha's been so thankful for being with us. We're looking forward for her. She keeps moving forward to get there and get her apparel business going on. So thank you, too, for all that you're doing. And Ed and Caesar, we certainly do appreciate y'all. Y'all were on earlier. I guess you had to turn off. Maybe they'll be back on board with us in a few minutes. Amy over in Durham area and Burlington area, getting her venue started for public events. And Felicia, thank you so much. She's in Willard too. I think we got maybe 3 or 4 people with a Willard address. That's pretty interesting. And Sarita over in Clinton, very loyal and been with us and always offers a lot of help and support. Thank you so much, Sarita. And Sarita is the one that actually helps us get our certificates printed up and address labels. I count on her a whole lot to help us make things happen. So thank you very much. Monique started with us, but she's been kind of laying out on us a little bit. Maybe she'll join us during the next few weeks, and that's the nice thing about having the second section. So hopefully she'll be back. Amanda's working right away. She's in here working tonight and getting her kitchen and her bakery getting ready to start up. I'm looking forward to buying something from you, Amanda, so keep it coming, okay? You have some real pretty certificates, a lot of color in them. You'll be proud to frame them up, and I'm looking forward to sharing those with you. You get one certificate signed by John from the community college. That's your course completion certificate. And then when you finish your academy homework and your quizzes and such as that, you'll be qualifying for your academy graduation certificate. And there you'll be named a associate of the academy, so you get a title that you can take to the grocery store with a lot of money and buy some groceries or whatever. Not worth much money, but you should be very proud of it because you worked hard to achieve it, and you'll have the Academy of Associate member. And then when you come back next year to your next session, every time you complete another series, you get a more impressive title, like Advanced Associate or Master's Associate or a Master's 2, 3, 4, or whatever. So we encourage you to keep coming back and helping yourself and helping other people as well. I emailed out the quiz today. Several of you have already completed it and sent it back. I appreciate that, even though we hadn't finished our last session where some of the answers were. But get those, finish them out. Make sure that you include that area there that gives me your mailing address and your phone number, because we send these certificates we send out by mail. We may be able to next week when we have, or week after next when we have our in-person session over at James Brunt, we may be able to have some of the certificates ready if we can get your test in and such as that, and if Sarita can help us do it, where that actually we could do some presentations over there. I think that'd be really great. So if you have any questions about those quizzes, it's fine. This is not nobody fails this quiz. I want you to make 100 on it. If there's some questions you don't know the answers to or you can't find them, you send them back. We'll do it. I had previously sent you out the quiz with all the answers, but if you have a question about it, that's one other thing. I've also got one thing that I want to say with the quiz. Passing the quiz is one thing, but just as important as that is for you to take the 40 drill skills handouts that we've been sending out each week. If you haven't paid attention to those 40 drill skills and at least went through them twice, I want you to do that, because it's going to be really, really important and help you as we tie all this together. So you got your study guides, you got your quiz, understanding and appreciation you got tonight, and just reminding you that we do have actually 5 more Wednesday nights online and 1 Wednesday night where we'll be person to person in Kenansville. So our topic tonight is looking at basics, just a good summary of basics that you want to know as you get started in your business, things that will help you get going. The drill skills are overall basics and that you can do on your own now. We've spent a lot of time rehearsing them here, so I'm not going to take time to do it tonight. Lee, let me welcome you on board. Glad to have you back. Enjoyed your presence yesterday, and I'm so glad that you're back with us today. Record keeping. You know, they said that when computers came out that we weren't going to have to use paper anymore, but it seems like we use more paper than we ever have before. And whatever kind of business you're doing, if you do any kind of business, and if you look at my desk right here, you would see a stack of paper about that big over here, just a big mess. Well, I start cleaning up my paperwork Thursday at noon, and I don't quit to leave the office on Friday until I can see wood. So paperwork is always building up, and we have to file it in certain ways that we can do it. When it comes to taxes, taxes will always go back to your paperwork, and that's one reason we have to keep so many files. So just know right now that you're going to need a filing cabinet, not only for paper products, but also you're going to need a filing cabinet on your computer. And this is one reason it's so hard, impossible to run a business on a telephone. So if you're somewhere and you see a good buy on a used filing cabinet or something, somewhere that you can take advantage of that, go ahead and take advantage of it, because in 1 year you'll fill up a filing cabinet either with paper documents that you generated, or it will serve as a good storage place for clean paper, stationery, and things like that. So find space for a good filing cabinet for your business. But computer-wise and software-wise, there's a lot of ways to do storage. And the flash drive, the little thing that plugs in, are so handy and so good. So get used to using flash drives. And Amanda, I know you told me maybe you're not so hot with computer issues yet. Well, let me tell you, I was not either when I first got started, but we can learn with time and in time get it done. And indeed, we've got people on board with us that for a very reasonable fee, or maybe trade it out for one of your bake products, come by and show you and help you get set up. So we are about helping each other, everybody, and let's try to do that. So learn how to save your software. And the main tip I want to talk to you about as you're getting started, and something that just will floor you and make you so disgusted, is you'll get into doing a file and you think you got things right, and you'll get disturbed or distracted for some reason, and then all of a sudden you've lost it. You hit the wrong button and it's gone away. Or as Penny told me today, I hit the wrong button and I had 500 pages instead of 1 page. And man, things like that happen all the time when you're messing with computers. So try to get your skill levels up to par. Practice, have somebody help you, take some tutorials. But mainly, as you're doing important work, learn to start saving as you go. Learn to hit that save button so that you don't lose your work. As late as last week, I had worked on a document about 35 minutes, and then all of a sudden I hit the wrong button, and heck, it was gone, and I couldn't retrieve it. Windows 10 software helps you, really is good about helping you find stuff that you've lost. But heck, you got to be smart enough to make Windows 10 help you with it. So there's a learning curve there, and that's what I would encourage you to do, is to try to learn to save your work, use your flash drives, and start using the cloud for your stories, because that's the easy way, and there's software to help you do that. There's some records, some paper records, that you're going to need to keep permanently, I mean like forever. So just know that's why you don't need that filing cabinet or a place to store your records to begin with. And I've got them listed on the slide here: articles of incorporation, copyrights, deeds and mortgages, and stock things. Some of these paperwork, you need to put them in a place, and on that filing cabinet door on your computer file, put permanent. Other items like depreciation schedules that we'll talk about some tonight, financial statements, license and permits, trademarks. So again, have you get your a filing system started, and get it listed so you can find stuff in it when you need it. And now you're going to need to box up items every year and label it which year it is, because certain records you have to keep for 7 years. 7 years. And I like to say that the law says 7 years, but it's a good idea to keep them 8 years. All different types of business stuff: your bank statements, bills of lading, cash records, employment record situations, things like that. So if I'd ask you right here, what is a bill of lading? Do you know what a bill of lading is? Well, if you hadn't been in the shipping business, there's no reason you would know, but now you got to. Because a bill of lading is proof. It's a document that lists when you ship something and who you shipped it to and who was the carrier, and all the details about things that you ship to other people, or mail to other people, or UPS to other people, stuff that you sell that leaves you, that's not bought right at your storefront. Lots of items that you ship out of state, you do not have to charge your customer sales tax if it goes out of state. A lot of items you do have to charge them sales tax, so you need to know your business and what you're doing before you take this down and write it down. Now remember, I told you I'm not a tax accountant, but I am somebody that sells a lot of stuff out of state. In some states and some items we have to charge tax for, and others we don't. But when you have an audit, a sales tax audit, if you did not charge North Carolina sales tax, you're going to have a bill of lading, a proof of shipping, right there, so you can tell the auditor why you didn't charge tax on that. So just learn now, as you start shipping on items that you're not collecting sales tax on, is you staple that shipping label right to your invoice, so if you're audited, you can find it. And this is some of the things that require the 7-year keeping them. You want to keep your sales tax returns or invoices. Remember last week we talked about the invoices and how they're numbered. You have to keep all those. You have to keep them at least 7 years. And again, I suggest that you keep them 8 years when you can. Just a good idea. Canceled checks, payroll records, you want to keep those as well. Now, we live in an area that's hurricane prone. We all know that, don't we? And of course, all you folks down in Sampson and Dublin County know about how floods can wipe us out from time to time. So it's really important that you understand that if you are wiped out in a storm or we have a disaster in the area, to qualify for FEMA disaster help as a business, you don't have to have your records to prove how much business that you lost. So sometimes after a tornado, a flood, or a hurricane, FEMA will offer businesses grants or gifts or low interest loans. But when they do that, they base it on how much money you lost. So you don't need to show them your profit and loss statements, your tax returns, and such as that. Now, this is a point where we have to learn in business there's always two sides to every story. So if we've been doing the best that we can not to show any profit so we don't have to pay any taxes, like a lot of us will do that, and we go up to FEMA and we say, I've been wiped out and I lost X amount of money this year because of the storm. Well, they're going to say, well, show me where you lost that money. How much did you make profit during this time last year? And if you have fixed your books so that you're not showing that you made any profit, then you don't need to expect to get any reimbursement for profit lost. So it's always a two-edged sword. You just need to know that, and go in with your eyes wide open. All right, that's record keeping. Now let's talk about depreciation. You ever heard that word before, depreciation? I'm sure you have. So let's talk about it, what it's all about. It is a big, big thing when you talk about taxes, because depreciation helps us not have to pay so much money with taxes. The money that we can show that we depreciate comes off of our taxable income. So it gets kind of complicated, and it's kind of important that you understand it. In 2 or 4 or 6 hours, I can't explain it all in a webinar or a seminar, but I'll tell you what, I've sent you a handout by Lisa Borga, who wrote a really good summary of how depreciation affects us in small business. So I sent that to you, so maybe you can have some coffee time one morning in the next few weeks. Print that out or read it on your computer, just so you can get a sense of it. And then if you have a serious question related to depreciation, you can go back to Lisa's article and it will help you out. It's really, really good. I don't hit the high marks now, but so you'll know what you're doing to get started. The definition of depreciation is a reduction in the value of an asset as time passes by, because you get wear and tear. So if you buy a new car and drive it off the lot, simply driving it off the lot, and it's not new anymore, it depreciates. The value goes down. And then when you add miles to it, and the tires get a little wear on them, the upholstery shows some dings, then it's worth less. So that value going down is called depreciation, and it's really important for business and taxes that we understand that, because depreciation helps us spread the cost that we buy new things from over a period of time so that we don't have to pay so much tax. And I'm going to show you how that works, okay? Let's say that your company today has $10,000 in the bank. And if it does, I congratulate you. That's about how much mine's got, maybe a little bit more, but I've been in business 64 years, and I've learned that sometimes I have to keep right much money in the bank. But when I first got started, and when I started out my new business along the way, $10,000 was a lot of money, so I consider it very important. So if you're just getting started and you got $10,000 in the bank, then the worth of your company is $10,000. That's how much it's worth. But let me tell you, you're planning on doing some serious sawing. You need to saw up some stuff. And Amy, did you have a question?
I'm sorry, I don't. I came off mute by accident.
All right. Thank you very much. No problem. Okay, so we're going I got $10,000 in the bank, but I need to buy a saw. I don't get in the wood cutting business, so I'm going to buy a saw. And When I go buy that saw, I'm going to use that $5,000, and I won't have but $5,000 left in the bank. So my question to you is, did your net worth go down $5,000 when you bought that saw? Did it? Did you lose 50% of your net worth of your company because you bought that saw? The answer is no, you did not. Because you still got the saw and it has a value. It is now an asset. It's not cash, it is a tangible asset. And that counts towards the value of your company. So you're still worth $10,000. You got $5,000 cash. You got a brand new saw worth $5,000. So you're still worth $10,000 the day you buy the saw. But the next day, that value is going to start going down some. All right? So you just need to know that. Now, depreciation is a way that you can write off the value of new things that you buy. So there's that term. I used it, write off. And y'all have heard the people talk about it all your life, but maybe you didn't really understand what write off means. Write off means that you're going to write off some value of your taxable liability, of your taxes you're supposed to pay, and you're going to write off some of that by using depreciation. So depreciation becomes a real friend. So let's look at it. Let's say that $5,000 saw, we're going to write it off over a 5-year period, and we're going to write it off at the rate of $1,000 a year. So the first year it goes on our books, and our books is our depreciation sheet, the value of our asset. The first year it goes into our books at $5,000. The next year we're going to take $1,000 away from that, so it's worth $4,000, and so forth, all the way down to 5 years later. It's only on our books at $1,000, and the last year at 6 years it has a zero value on our books. All right, makes sense. You can see how the value's coming down. But okay, what does that mean to us tax-wise? Well, that means that if our depreciation tax exposure means we're going to take off of our taxes we have to apply, not the actual tax money, but our tax exposure, the amount of money we will owe taxes on, which is the amount of profits that are left. We're going to take $1,000 out of that piece of pie every year. So every year that saw is saving us tax money. You see? And you can see that that'll save you a lot of money, and that's a $5,000 item. If you were buying a $60,000 tractor or backhoe or transfer truck or oven or a printer or a sewing machine, whatever you're buying costs you money now, but it saves you money on your taxes if you're making profit. If you're making profit. And sometimes by buying things, you can reduce the amount of profit that you're making through depreciation. Now, there's two kinds of expenses, and we need to talk about those. As we get started in business, we're having to buy things to sell. We're having to buy things to make. We've got other expenses like rent, telephone bills, insurance, payroll, supplies, the lawn maintenance, shingles, and repairs, all kinds of expenses every day, just like you have in your daily life. Well, some of those expenses are going to be called business expenses, just regular stuff. And usually that regular stuff that has no value, that you're spending money but you don't have anything to show for it, those are generally just called general automatic 100% write-offs. But there's other items that are called capital expenses. Those are those big ticket items that are tangible. Those are those big ticket items that after you buy them, you can look at them and see them and touch them and feel them and look at a serial number and show them to other people, and it's going to be around for several years. And those are the items that we will be considering our capital expenses or our assets. And our assets are always listed down to create the book value of our company. Our assets are combined together to create the book value of our company, or in other words, what is our company worth on the books? With me so far? All right. Now remember, our first lesson in a couple of weeks, we're going to go back over this. So get a dose of it now and think about it. And when we go back over it the second time, I'll have a little bit more time to spend on it. Part 3, let's talk about taxes. First lesson, every time that I talk to an accountant, I ask them this question. You know, I try to help folks get their business started. I talk to a lot of people during the year. And I want to give them the best information I can. What would you, as a certified CPA, tell me to talk to my friends and associates, give them something to hold on to after their first lesson about taxes? And every time the CPAs tell me this: encourage your new business entrepreneurs to pigeonhole, to set aside tax payments, because it is so easy to get rolling, start paying stuff, you start collecting taxes, and you have a really good month, and you've got right much money in the bank, and so you said, man, I got some money, I get a chance to pay some bills now. So you start paying bills and you pay them all out, and then the end of the month comes and your taxes are due. And when I say taxes are due, that don't mean, well, maybe you can pay them like a bill that comes in the mail. No. When you're paying your sales taxes and your employee taxes and your insurance payments, they got to be paid on the right date. You don't get behind with that. So if you've used up your tax money paying other bills, you're in trouble. Not just a little bit of trouble, but big trouble. So the way you avoid that, especially just getting started, is when you're making sales and you're collecting money where taxes are involved, or you paying payroll to people that you're supposed to be taking their taxes out, their deductions, then you put that money in a separate account and keep your hands off of it, and you'll stay out of trouble. Now, I've done this for 64 years, especially when I had lots of employees, because those employee taxes would run up to tens of thousands of dollars a week sometime. So you got to be conscious of that. That is not your money. Remember last week when we did the bookkeeping, we set that $56 aside right to begin with, and that's what I want to encourage you to do. Pigeonhole those tax payments to help you stay out of trouble. Now, those business expenses, we use those for conducting our trade in the business. For example, the cost of renting, business travel, paying employees, all of these are just basic deductible business expenses. They are 100% write-offs, no questions asked. However, capital expenses are a different thing. Capital expenses are for those items that will last you at least a year or more, and that you can depreciate them or amortize them or deplete them, and they come into a whole different range. Not only can you get tax help for the amount that you actually paid for the machine, but if you're financing it or have some type of long-term financial arrangement, then amortization or depletion comes into play, and you might even get some help for the interest that you're having to pay on items like that. So capital expenses are a big thing that I want you to leave here tonight with a good understanding on it. Now, let's say that you're going to go out and buy a $250 printer, and it's a good printer. Would that printer be a capital expense or a business write-off? Well, every time, the beauty of this is you got a lot of power here. A new printer that costs $250 in my business will last me about 10 years. So, and I need to show all the net worth I can, because I'm a fairly small company now. So I would write that printer, I'd pay for that printer, get the serial number on it, and tell my bookkeeper, we're going to depreciate this. It's going to be a capital expense. It's going to last a long time. And I always show you exactly where it is right here in my office, right here beside me. So we'll do that. We'll take the time and energy to depreciate it. But if I was a big insurance company and I had 1,000 adjusters out there in the field, and every one of my adjusters had a printer, and would I want to keep up with all those individual printers? Heck no. So a big insurance company would just write that off as a business expense and not worry about it. Now, a $2,500 printer, I would certainly depreciate it. I've had some $5,000 printers through the years, and most people would depreciate those and put it on their books. But how about the paper that we buy with the printer? Let's say we bought a case of paper for $250. The paper would never be a depreciable item. We would just write that off because it's going to be gone within a year and we'll have nothing to show for it. So that would be a write-off. The printer maybe, the paper definitely would be a write-off. Now let's talk about trucks, truck tires. A $2,000 truck set of tires would last me with my trucks through the years. A brand new set of tires for my trucks would last several years, so I would probably depreciate them to save all the tax money that I could. But if I was a huge trucking company or a bus company or a big farmer that had lots and lots of trucks on the road, then I'd just write that off. I would not try to keep up with each set of tires. How about a brand new engine for the truck? Most everybody would depreciate a brand new engine because they'll last 15 or 20 years if they're taken care of. So they would depreciate those and call it a capital expense. But while I was renting my truck, while I was getting my truck repaired, I rented another truck, paid $4,000 rental. And is that a write-off or a capital expense? Rent is always a write-off because once you pay rent, you have nothing to show for it. Everything that you depreciate, you need to be able to put your hands on it and prove you still got it. All right? Because the county tax people are going to take a look at that. Payroll, 100% write-off. $2,500 CPA fee, 100% write-off. Or $4,000 set of shop tools, well, let's talk about that. Set of shop tools will last a long time. So if you went out and bought a $4,000 set of shop tools, you would probably depreciate that. That's a good asset. But almost nobody goes out and buys a $4,000 set of shop tools. We buy $100 this week or $30 next week, or usually we're always buying tools depending on what our needs are. So the good news is at the end of the year, you can take those small purchases of individual tools and bundle them into one number, one summary number, and list that as a set and take that value, and you can group them as a set of shop tools, even though you bought them at different times. You just need to be able to document how you came up with the total and take a tax advantage with them. Now, I used to be in the forklift business and did a lot of this. Let's say you've got a situation where you're renting a forklift and the rent on it is $1,000 a month. Well, that would be rent. It's a write-off. To bring the forklift to you cost you $200. Delivery cost, write-off. No doubt about it. Anytime it's called a rental, anytime it's called a lease is really important now. Delivery fees, transportation costs, 100% write-offs. They come right off the top. But I had a deal where that I rented this forklift for $1,000 a month for 24 months. And at the end of the period of time, and that forklift was worth about $25,000. And I rented it for 24 months, paid $1,000 a month out on it, and the leaser agreed to sell me that forklift for $5,000 at the end of the lease. That's called a lease purchase arrangement. So, all right, I've already paid that $24,000, and we've already written it off in previous years. Now I'm writing a check for $5,000 to actually buy the forklift. Now, when I actually buy that forklift, it will go onto my books. It will become an asset because it's going to last another 20 years. It's going to come onto my books as an asset, and I don't put it on the books at $5,000 because that's all I really paid for it when it was time to purchase it. So pay attention real close now. We got $25,000 in this forklift. Matter of fact, we got $29,000 in this forklift. 24 months rent plus $5,000. And the forklift is really now at a point where it's probably worth about $16,000 fair market value. But it's on our books at $5,000 because that was the amount that we actually paid for it. Here I want to make the point that all through the series we've been talking about fair market value. There is a definite difference in fair market value, which means what something will sell for on the open market, and book value of what your assets are in your company on your company books. They can be great variance of differences in the values. So you never want to confuse book value with fair market value. A company may be worth $1 million fair market value, but not show that they're worth but $4,000 book value, and vice versa. So you have to be really careful, draw lines under it. Book value has nothing to do with fair market value. All right, let's talk about doing taxes. On this table over here, if I could turn my camera, you'll see it. I got all my stuff laid out. I'm summarizing my taxes. Not a fun thing to do, but hopefully before next Monday, I'm going to be ready to give my tax information to the accountant. What would I tell you about that, my friends? I would tell you that try to find an experienced bookkeeper, a bookkeeper that has had some experience with your type of business. To begin with, you're probably going to do your own books, as I did when I first got started. But it won't take long as your business grows and you get into tax issues and doing this and that you will need to hire some professional help. I want to say to you that there are lots of good bookkeepers out here. And in today's world, there's lots of good virtual bookkeepers. Matter of fact, we may even have some on board. And this is a good place for me to say, I said this the other week. If you are or are thinking about becoming a virtual assistant of some type in marketing, design, bookkeeping, word processing, any type of assistance that you would be able to offer to an entrepreneur, and you're ready to start doing it and you want me to help you stay in touch, then you need to let me know. You need to let me know that you'd like to pursue that. And Penny, I'll pick on you, Penny. It is so evident that you've got some super strong skills in marketing and videography and things like that. And if you want to do some work for some other people, then you just need to let me know, and I'll try to help get you set up. And you do your business plan for it, and it might go a long way. Several other of you may have those same type things. Danielle, you've mentioned that you're looking at a lot of different things that you might want to do. So offering virtual assistance or part-time assistance to other folks is a really good thing to do. And I'll certainly help you pursue that. Last week I had 2 people that came to me, and I've already sent them some work or opportunities to bid anyway. So hire you a bookkeeper if you can find one that's got some experience. And then you want to hire a CPA. CPAs have to have some experience because they can't become a CPA until they've worked in an office a while. But I want to give you a word of caution like I gave you last week. You don't want your bookkeeper and your CPA really too tied together. You want both of them to be working for you individually, not working for you as a team, covering for each other. Just keep that in mind. There's 2 words now that we all have to know as entrepreneurs. One is tax avoidance, and the other is tax evasion. Very important words. Tax avoidance is a good thing. And as entrepreneurs, we need to know how to avoid paying more taxes than we have to. I didn't say we need to cheat, lie, break the law, but we can set up our books and use our depreciation and our assets and leases and rentals and different ways not to cook the books, but indeed to construct the books in a way that gives us all the tax protection we can get. We need to do that. But tax evasion is a different animal. Tax evasion is taking everything that I just said and going way too far over to the point that you're lying, that you're cheating, that you're giving false impressions, things that you can't document, or you have to falsify documents. That will get you in jail, put you out of business, and cost you lots and lots of money, and it will cost you your legacy as well. So it's a fine line there, and that's why we have this seminar lesson that we're talking about tonight. What's the difference in the two? Avoidance and evasion. Avoidance and evasion is the legality of it. Tax avoidance is legal. Sometimes you'll have artificial transactions so to give you a tax advantage, and that's perfectly fine. Tax evasion is illegal. Don't need to cut the cheese on it. That's just the way it is. Let's talk about some hot buttons now. Hot buttons that bring us focused in. Deductions. You're getting ready to think about your taxes and the money you were spending. Just remember, we were just talking about the deductions that you would use, capital expenses or write-offs. Well, these are all write-offs. None of these are capital deductions. These are all the write-off things that people are concerned about. Now, Amanda is getting ready to open up a kitchen in her home. And so I don't just talk about her in theory. Anyone that's doing that maybe is getting ready to put in some equipment, to set up a home office there, such as that. So we don't change our homes around. And so we want to see if maybe we can get a tax advantage if we operate in a home office. Well, generally that is to say that the tax folks say that whatever percentage space that you use up for your home office, that percentage of your house would be the amount of percentage you would take from household expenses as a tax deduction or write-off. Let's say you've got a 1,000 square foot apartment and you are using 100 square feet as your office. That means that 10% of your home is being used for your office. So you would take your expenses, your light bill, your rent, your yard maintenance, your paint, your repairs, all that stuff, see what the total is, multiply it times 10%, and carry that over and call it a business office deduction. Now, even operating as a sole proprietor and on your 1040 tax forms, there's places even on the most simple tax forms where they ask you if you've got a side business going on or some other deductions. So you want to keep up with all these numbers because it will help you pay less taxes personally, whether you're paying taxes as a business or not. Even on your personal return, it'll help you. Travel and meals and entertainment can be deducted if they're strictly business. Going to Las Vegas and having a great time and coming back and saying, oh, that was a business trip because while I was out there, I met a customer. Well, you're probably not going to get by with that if you're audited. They're probably not going to let you take that as a deduction because you met one customer out there. They might let you pay they might let you deduct your airplane bill, your hotel expenses, and even your food while you're out there if you've gone to a convention or a business meeting and you can document that. Then there's a good chance you can write it all off. But write it all off doesn't mean that you're going to be able to write off your gambling losses or some big entertainment bills that you paid or such as that. It will be scrutinized. The use of your car is a big deal because when you're using your car or your truck to do business, then the business needs to compensate you for that time. And right now, according to what Danielle told us a few weeks ago, I believe that number was, Danielle, was it 70-some cent per mile, 60 or 70% per mile, which means that
65.
65. Okay, thank you. That would mean that if you drove your car 100 miles doing business, that the business should pay you $65. So that adds up really important. most of us are better off if we don't have a business that's going to require us to buy lots and lots of vehicles, a whole fleet of trucks. We're better off for the individual, me and you, to own our vehicle and charge the company for the travel on it. Now, there will be a point in time that if you have to buy some specialized equipment, that maybe it's better off for the company to own the vehicle because they'll get a better insurance rate and such as that, and you don't have to keep up with all the tires and the gas and such as that. The company would just pay for all that. Now, if you're owning the car, you pay for the gas, you pay for the repairs, you pay for the tires, you pay to get it washed, you do all that, and the only thing the company pays you for is the mileage. Okay? And that's a reimbursement. And you would keep a log of all the miles that you drove at a certain month, where you went, what you did. Now, when I was giving the seminars and out on the road every night, driving 1,000 miles a week sometimes, that added up to a lot of paperwork, but it also added up to a lot of money that the company needed to reimburse me for, because it was a big deal. I'd have some travel expense reimbursements, $3,000 some months, so it had to be kept up with and had to be documented. Interest that you're paying related to your business, 100% deduction. Rent, taxes, insurance, business training, and clothes and uniforms, that's right. Now, what about this uniforms? Well, if in your business you're going to have to dress a certain way or have a certain type of clothes that you need to be wearing and to be professional, or to be to do your cooking in your own kitchen, or whatever it is, then I would suggest that several times a year you go buy a lot, a group of outfits that you will be using at work. Now, I'm not saying fur coats here or any bathing suits or things like that, but things that you would be using at work. I've done this for a lot of years. I'll go buy a group of clothes a couple of times a year, $300 to $500, $600 sometimes, and I'll save those particular bills and write them off as uniform expenses. So far, I haven't been challenged on that. My accountant just shakes her head sometimes and says no, but let me tell you that for over 60 years, I paid for the uniform costs of all my employees and made sure they had nice, clean clothes to wear. And I started getting some for me too, because it costs money to dress nice to go to church, to work, and we wear that stuff out. Now, I'll mention something about insurance that'll be very important to you. There's certain types of insurance that you can buy and have the company pay for it, the whole bill, like, and it'll be a write-off. But if the company is paying life insurance premiums on you, life insurance on your death, the company can pay those premiums 100% and write them off if the company is the death beneficiary. If the companies don't get the benefit, the company can write that off and tax-free. That's a pretty good way for you as an individual to get covered insurance-wise. And if you own your company, what's the difference? If your estate or your heirs want to have that money paid to the company, that's just fine. A lot of us will borrow money when we'll get extra insurance when we borrow extra money, so that if we pass away, that the debt will be paid off and it won't be left to our issues. So let me leave it like this for you. As your business grows, and if you see the need that insurance is important to you, you're making good profit, you can spend a little extra money, and you'd like to direct it, then I'd suggest that you talk to an independent insurance agent, because these laws are changing all the time, and see what percentage of the death benefit has to be paid to the company for the company to get the write-off. For a long time, and I think it's still that way now, that as long as the company's getting 51% of the death benefit, then the other beneficiaries, there's no strings attached, and the company still pays the bill. So what does that mean to you? That means that the company is going to write a check to pay that insurance, instead of writing a check to you that you have to pay taxes on that money and take deductions on. All right? So there's where it is. And a lot of these things we're talking about is that area of tax avoidance that I want to encourage you to talk about. If you have some particular questions on that, talk to John. If you ask me the questions I don't know, I don't tell you I don't know and suggest you talk to a CPA or an accountant, because everybody's situation is going to be a little different. But this is a lot to do with how much money is left at the end of the year that you have to work with. Just like I've got them over here on my desk, I've got probably 500 sheets of paper. I'm going to sort them out and put them in certain groups, and I'm going to get them all fixed up. A lot of folks, though, will not sort it out. They just take their box of paperwork, give it to the bookkeeper, give it to the accountant, and say, okay, here's my taxes, fix them up for me. I want to caution you not to do that, because every piece of paper that an accountant picks up is logged down. They log it down. Each piece of paper has got a document number, how much time they spend on it, and every minute that is spent is on the clock. Therefore, your bill goes tick, 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 up, up, up. Tick-tock, more money, more money, more money. So a good way to save money on your accounting bills and bookkeeping bills is for you to take the time to summarize, to group your different types of paper, and just list down the different types of payments that you made. Like all your insurance payments was this amount of money. All your gas money was this amount. Your office expenses was this amount. You keep all the little documents, just give them the summary sheet. That'll save you tons of money. And if they need something, if they need to see something, they're going to ask you for it. There's no doubt. You don't have to worry about that. But it's still going to save you money by summarizing. There's 4 different groups of people that's going to collect taxes from you. And sometimes they're not called taxes. It's called permits, licenses, estimates, and fees. But in my mind, it's all tax money. The 4 folks that's going to come after you for money are the city, the county, the state, and the federal government. The city, the county, the state, and the federal government as far as taxes goes. Now, all your other debtors are going to be right in there too, but these are the taxes. Usually your tax related to cities, you can talk to folks at the town clerk office. The county, they don't have a regular tax office. You can walk in there and talk to folks. North Carolina, you got regional offices, or you can pick them up. And of course, the U.S. government is the IRS. Now, here's some personal advice based on experience. Normally, you can have a good, friendly conversation with the county and the tax people right in your local county or whatever. You tell them you're a brand new business just getting started and you need to know this or that. They'll find someone that generally has been down this road before and can give you good, straight advice. And thank the Lord, it's the same way with the state of North Carolina. NCDOR, which is the tax agency, Department of Revenue, have excellent counselors for small business folks. And they have regional offices around, like one in Wilmington, one in Goldsboro, Raleigh, Fayetteville, so that you can schedule an appointment to go meet with them in their office. Now, of course, COVID screwed that up for the last 2 or 3 years, but I think they're scheduling appointments now. And NCDOR sends agents out to the different small business centers. So if you have a particular question, you can check base with a small business center, and they may have a North Carolina DOR person coming. And those people that come to the small business centers are trained to help entrepreneurs. They have a whole section there to do that. That is good. It's good to be able to say something about government that's good, and this is one of them. We're very blessed in North Carolina to have an excellent NCDOR. Now, the federal government, Washington, D.C., they got local offices too, but it's really hard to talk to a human being about a federal tax issue. You can do it, and maybe you'll get lucky, and they have the SBA for small business stuff and all that, but it's really hard to understand what they're saying and to get hold of somebody when you want to. So I'm going to give you this advice. If you have an important issue and it's urgent, or it could mean a lot of money to you with a risk here or a risk there, I suggest that you have your CPA, not your bookkeeper. I suggest you have your CPA be the middle person between you and the federal government. It's just like going to court. You don't want to go to court without a lawyer. you don't want to go to the IRS without a CPA doing your talking for you, because the CPA can ask the question and never tell them your name. So they can get the answers for you, and they're under no obligation to. So that's just a word of advice. I hope that you don't ever run into that. But you remember old Papa Steve, though, told you, don't go to a meeting with the IRS without first talking to your CPA and seeing how they'll help you. That is one big advantage why having a CPA to do your tax returns will pay a dividend if you ever get in a jam or an audit. Sales and use tax are a number of different taxes that we're going to deal with. So in your handout and here on the screen, I'm not going to spend a lot of time on it, but I wanted to tell you where to go and give you the addresses and the phone numbers. So you can see here on the slide, and it's in your handouts too, how you can contact the North Carolina Department of Revenue. And they're interested in withholding tax, that's employee withholding tax, privilege license, unemployment insurance, and franchise taxes. Those are the different kind of taxes that the state's going to be involved with. Now, you're probably saying, what is that franchise tax all about? I'm not going to be a McDonald's or a Chick-fil-A. Well, I wish you were, but at any rate, I don't own a franchise. Why am I paying a franchise tax? Well, the state and the federal governments have a little line in their returns for businesses. The line says the same thing on it, franchise tax. Well, what that is their way of collecting some money from you, whether you have any profit or not. You're going to pay a franchise tax, whether you pay any other taxes or not, every year. It's kind of like this is the fee we're going to charge you to look at your tax return. It's not very much. I think the federal was $200 and the state's $100 on average, but they're going to get a little piece of action there. So when you file your first business return, congratulations, you'll be paying a franchise tax. County taxes are a different animal altogether. You know, you pay your state and your federal taxes based on income, based on how much you make. But you pay your county taxes based on how much you own, property taxes. Excuse me. And those property taxes are determined by, and here we go full circle, the property taxes are pretty much always determined by how many assets you have in your company, how many depreciated items you have in your company. So this is where depreciation plays another role in our tax picture, and it's important why you need to know it, because everything that you were deciding to put on your assets list so you could save a little tax money now is going to be on a list where the counties are going to look at it and charge you a little tax money. That's right. The good news is county taxes are usually pretty darn reasonable unless you own a lot of real estate. They're probably still pretty reasonable, but they really go up when you get into some high values. This is one reason why I probably don't want you to buy your own property and go in debt for it just to get your business started, because you're better off to have that debt on you individually, where that it helps your personal financial statement, than to have it over on the company financial statement where it represents a long-term debt. Now, why would that be the case? Well, when you buy real estate, you generally finance it for 15, 20, 30, 40, 50 years. Well, not 50 years, but 20, 30, 40 now. And that is a long-term loan, and it's usually a lot of money. And a new business, a startup business that is going to a lender that has already got a long-term debt, significant long-term debt, it's almost a shutdown for that lender to loan you any money. They may not tell you this, but it's in the back of their mind. Why do I want to give a brand new business, take a chance on them with a loan when they've already got a long-term debt and that debt has already used up the collateral of any value they may have. They're not going to want to do it. They'll be nice to you, give you a lot of excuses, a lot of this. So you would have been better off to bought that property as an individual and let your new company rent it from you. Yeah, you can rent property from yourself. And when you do that on your financial statement for your company and you're renting, you only list down 12 months rent. You don't list down any other debt but the 12 months rent. Right. But if you owned it, you'd have to list down the $150,000 or $200,000, $500,000 total debt. So always, if you can, rent your property from yourself for some way that will come back to you. You're going to end up owning the asset and have more flexibility with it anyway. And I'll tell you this, if you ever get ready to sell your business, same thing applies. You can sell your business and rent that property to the new owner, or they may move on and you rent it to someone else. Just something to think about. Now, let's talk about auditing. The auditor screen is like a radar screen, and I don't know of anybody that wants to hold a hand up and say, hey, auditors, come on over here and check me out. Because it's not a fun thing to do. You have to stop what you're doing, drag your records out, sweat blood for a while, and just hope that everything looks good. The good news is that only less than 1% of all tax returns are audited. But you know how that 1% can come up and grab you sometime. That's good news for everybody. And this past year, the Congress voted to put a lot more money in so that we could get more things audited. And I think that's a good deal, because I know that, in my mind, that there are some huge corporations out there that if they paid their fair share of taxes, that the country would be a lot better off, and us folks out here with small businesses probably wouldn't have to pay so much. At any rate, that's a matter of opinion, but hopefully you and I will not be in that 1%. So a good way not to be in the 1% is not to raise up, put red flags up, and invite them to come to see you. So I wanted to share with you some ways that you can avoid having that tax people come and see you. One is to stay away from shady preparers, people that are scammers. And right now, already this past week, I started seeing these little yard signs out in different places saying, let me do your tax returns and you'll get $3,500 return, or big returns. We'll pay you your return in advance, all this kind of stuff. You need to be super careful there, because a shady tax preparer will write up your tax report and send it in with fraudulent information on it to make sure you're getting back a check. But that check is going to come to them. You can bet that they have it coming back to them, and they're going to get a piece of it, or maybe all of it, before you ever see it. Be careful with shady preparers. They are automatically flagged. The computer systems at the IRS know who these people are, and they try to find them, and they're shifty and they're on the run. So they get the money and they run, but you're still here and you have to pay the bill. At midnight tonight, and especially starting in a few weeks, late at night, you're going to see a whole parade of commercials of people saying, oh, me, I was in debt to the federal government for $80,000, and I hired this outfit that got it reduced down. And I was in debt for this amount of money, and I got this outfit to help me get it reduced down. Well, I think in my mind, as a matter of personal opinion, that probably most of those people got in all that trouble by dealing in scams and shady preparers. That's generally the way it happens, because you don't get in that much debt unless almost you plan to do it. Okay? Unreported income will always reach up and grab you. So you're an entrepreneur, you're trying to stay under the radar. I understand that. You want to put as much cash in your pocket as you can. But the folks on the other side of the aisle, they know how to look at you. They know basically estimates on what your income probably should be. And if you start reporting way less than what generally anyone would notice you're taking in, they're going to come and see you. So refrain from omitting stuff from your income as best you can. Now, things that are gifts or compensation or tips and things like that, we've all got a lot of adjectives of the reason we don't need to report that thing. But my word to you is, the further you get away from the truth, the closer you get to getting in trouble. So just be careful with that. Not filing on time is not against the law, provided you get an extension. And if you get an extension as a business for a good reason and your CPA gets that extension, no problem. But if for unnoticed reasons every year you delay paying your taxes, it's late there and late there, somebody's going to come see you one day and find out, what's the screw up here? What's the screw up? Now, I'll tell you that you can get an extension on your taxes, and you're probably going to need to, because when you become a business, the county is going to send you a business form. If you've already filed your business as an LLC or otherwise in the county, this year around December, middle of December, you probably got a county tax form. Well, those forms should be filed by the end of January. And if you don't file them by the end of January, you're going to have a 10% fine fee on your taxes when you do pay it. So as your business gets up and going and you having to wait for an accountant to do your books, they are generally going to wait till April 15th to give you your tax return. So there's no way that you can file your county tax form before you get your books from your attorney, your accountant. Why? Because the accountant is the one that determines your depreciation sheet. And you fill out your county tax form based on information off that depreciation sheet. So every year, as soon as you get that county tax form, go on your computer, go to the county office website, and they'll have a link where you can request a business extension to April the 15th. And there's no charge for that. And if you get that business extension, number one, you won't be counted as someone that always files late. And number two, you won't have to pay that 10% penalty. Okay? Just a word to the wise. So let's talk about our business priorities. This is the end of our 7 weeks of core topics, core basic topics. And what have we learned that we want to do? Now, this is the summary place. First, I'm always going to say, read and learn and try to memorize the 40 drill skills. But as we're starting our business, offer more than take it or leave it. Offer your customers something more than take it or leave it. Encourage to give them a way to talk, negotiate, a way to save some money, or bundle some items. Make it a part of your presentation. Then they won't leave it. They'll stay with you. Remember how important raving fan customers are? And we have to follow up with them after every sale. We have to write their names down and feed that database. Feed that database with all the people that are going to be our future customers for years and years. Have you looked at your mobile website? Have you made some changes there? I worked with my webmaster today on making 5 or 6 pages more friendly for mobile, and added some videos today. I added videos to 3 pages today. Have you got my business on Google account? Now, we've been seeing some remarkable progress on that. Some of y'all have done a great job with that. I want you all, as soon as you can, to have my business on Google account, because that is a free website for you that will start sending you business right now. To-do list. Now, we're moving now from me pushing you to do this and that every day. We're moving now into giving you the time to do it. These next 5 weeks, we're going to be meeting once a week and such as that to kind of catch up, and you'll be able to send me emails or questions or keep me up with standards. Start doing this stuff. Create those landing pages. Start getting you some testimonials. If you want me to give you a testimonial, you write to me, tell me basically what you're doing, and I'll be glad to. Let's do those videos. We're learning how to do the YouTube videos, and I've just seen some remarkable work from that. And so thankful for Penny to show us how she did it, and Vanessa. I got Maddie, my virtual assistant, did us a great job for finesse on her videos. And if you have some raw videos and you want to make them work better, I'll put you in touch with them. It won't cost you hardly anything. What is the magic marketing moment? What is that all about? That's when we follow up and we ask that customer, what are you thinking about buying next? What do I need to have in stock for you to be ready for your next thing? Now, you've got some children, you've got some daughters. Are you thinking about giving them some gifts? Maybe some jewelry gifts like I make, or some clothes like Tisha has? Or maybe you don't have a family party and you need Amanda to make a birthday cake, have a special occasion. Well, we need to talk to Amanda in advance so she'll have time to get it together. And what that's doing is making your business plan so you'll know what to expect. We're being the best person we can be as a business person when we're using that magic marketing moment. Any questions about what we talked about so far? You can unmute your own mics there, or I'll unmute them right here. Before I move into another area, do you have any questions?
Thank you for mentioning that. I have a lunch meeting with a young lady on Friday. She started her own construction company in Charlotte, and she's when I told her what I wanted to do, she said she would take me under her wing. And I'm like 14 years younger than you.
That's great. That's great. We got two people on board with unknown on the screen, just showing as unknown. Let me ask y'all to make sure you go to the chat board and give me your name, town, and email address, so we'll be able to register you in. Any other questions before I move on? All right. Now we're moving into an area right now that is not for the weak-kneed or light at heart or weak at heart. We're moving into an area right now that is not like you're a freshman in high school and just kind of flitting around and thinking about doing something. Because I call this section Sales 404. It's not 303 or 202 or 101. We're passing right by that fluffy, feel-good period of time, because I've got a certain amount of time here, about 20 minutes, to talk to you about selling and how important it is to have a few secrets, to have a few secret weapons, to know some things that if someone that would experience doesn't tell you, you probably had never thought about it. But every time you're working in that one-on-one situation to sell a cake or to sell a house or to get a contract, is important that you prepare yourself to do business, to do that negotiating, to do that forecasting, how it's going to go, so that you'll end up coming away with the deal. 5% of the salespeople get 95% of the deals. That's how important skills are. In gambling, they say that people playing poker, that 5% of the poker players in the national tournaments win 95% of the deals. So it's not luck. There's a lot of skill involved in basically every transaction that we go for. And I've been involved in selling for a long time, sometimes some big ticket items, sometimes not so big, but every one being important because every customer is important at the end of the day. Whether it's on the telephone or on your website or with emails, selling skills play. So let's talk about what that is. First, we've got to set out with a mindset as an entrepreneur that is ABC, not ABCD, always be connecting the dots. Now we've moved up to Sales 404 and it's just ABC, and that means we'll always be closing. We recognize now, having learned what you've learned, that closing is the deal. If we don't ring the bell and put the money in the cash box, everything else was for nothing. So first of all, you have to earn the trust of the people that you're trying to sell to. People don't buy from people they don't trust from. That's why all this work we did on our websites with testimonials and videos is so important. But then it moves down to the one-on-one relationship where when they're talking to you, they got to feel that you know what you're talking about. So building your own self-esteem helps people find trust in you, because you have to have confidence in yourself before they'll find confidence in you. So that's why it's important for us to talk about building trust and how important that is. Now, there's 5 assumptions that are kind of out here in the world with people that do things that's just kind of just off target, and they've got every right to do what they want to do. It's a free country, but as long as some people keep doing certain things, other folks are going to take business away from them. I'll put it like this: I try to go to church every Sunday because I need that. I'm a sinner and I need to ask for forgiveness. But I'm just amazed at some folks now that come to church and wearing their ball caps all down on the head, showing no respect to the institution as a whole. It looks like to me that some folks just try to see how bad they can dress to make a bad opinion. Well, yeah, you don't have to dress up to go to church or to pray. I know all that. But you know what? There's time to show respect. There's time to look the best you can do. And as business people, as entrepreneurs that want to do business with our community and folks that we hadn't met yet, and some of those are at church, there's a time to shape up and clean up. So I'll put that out there first. That's just a personal opinion. I'm sorry if I stepped on somebody's toes. But next, I want to tell you that taking a cell phone call or sending a text message right in the middle of the time that you're talking with one of your customers, that's a bad thing. Because the message that sends, you say, hey, this is important. I need to take this. Okay? No, it's not okay. Because if you're trying to close a deal or win this customer's relationship, what you're saying to them is, you are not as important to me as whoever this is calling me on this telephone. You are not as important to me as this dumb text message coming in. We need to forget about hanging on to this telephone all the time, because it makes us look like zombies, and the only relationship that we see people having is with their darn phone. I was at the hospital at VA the other day, and I was in a room with 8 people. I sit down in there, and every one of those 8 people had their phone out doing this and that. Nothing wrong with that. They got a phone, nothing wrong with that. Before it was over with, I had my phone out. But it was just a recognition of how hung up our society is on these. And you don't close deals on these telephones if you got a chance to talk to a customer. So stop taking calls or doing text messages in the middle of a business transaction. Man alive, some of the cologne people wear will make me turn my stomach up. I can't stand to see people spitting tobacco in an office or inside a place. I see people bring their dogs with them into people's offices. Folks that are into tobacco, absolutely, most of the time, their clothes smell, and they do. And those that are into tobacco don't smell it. Those that have their own pet dogs, they don't smell it. Folks that spit tobacco themselves, they don't worry about you doing it. But the whole world isn't there, and the people you're trying to sell to, if you're putting your problems of odor and disrespect in their face, they might smile at you and be nice, but they are not going to buy from you because they don't want to see you again. I don't care what you've got or how good your deal is, folks will walk away from you. Because you're basically saying to them, when you're not thinking about how you smell or how you look or what type of environment you're bringing into the room with smoking or odor, you're basically saying to them, well, take it or leave it. This is me. This is the way I am. I don't care what you think about it. Okay, you got that freedom. And if you're my competitor, I want you to keep doing it, because I will eat your cake when it comes to closing a deal. Be serious about that. And let me tell you, in today's world, for me to think that all the people that I do business with agree with my political views, they like the same public figures that I like. I would be crazy to think that. But I see it every day in business all over the world. All over the country with people I deal with. Some people will just right in the middle of a business conversation will come out with a slur against some politician. On both sides of the fence, they'll throw a rock here and throw a rock there and just come out with a slur. And even if I agree with them, I do not join that conversation because it will eventually get around to somebody else that I don't agree with. I got my opinions too, but my opinions are mine, and I do not share them with business. I will share them that I am interested in Veterans Affairs. I'm interested in cancer research. I love the American Legion and the work the Shrine does. I believe in a lot of stuff I will talk about. But let me tell you, America is 50-50 divided on a lot of political issues. And as a business person, walk away from that. Walk away from it. If you walk into a private office, even if the door is open, and the person you're going in to see is on the telephone, whether it's a handset or a cell phone, and even if they wave you on in and keep on talking, what you want to do as a professional salesperson is not go there. It is wrong for you to put yourself in someone else's environment when you're hearing a private conversation, even if they act like they don't mind. The professional thing to do is to say, I'll be right out here. Give me just a minute. Let me know. And walk out there and wait for that conversation to be over, because you don't know when it's going to turn to something serious. You don't know if another call comes in and they start in on another one, and it can be a real awkward situation when you have a client, somebody you're trying to sell to, and you're sitting there and they can't carry on a conversation because you're in the room. And very seldom will they ask you to leave. So you're better off not to put yourself there. When the conversation is over with, come on in and do your talking. And when your telephone rings, don't answer it. Don't answer it. Even if other people are doing that to you, you don't do it, because a lot of people don't know what you and I know right now. It is not the right thing to do to interrupt, disturb a business relationship conversation just because the cell phone rings. It is not the right thing to do. Let's say that you've sent a quote out, and I send out quotes every day. We need to follow up on our quotes. We don't need to consider that they're in the bag. Just because someone's always giving me their business, don't mean they're going to give me their business tonight. Don't mean they're going to take this quote and write a check. Our competition is strong, and they're always out there. So we need to be following up. In today's world, we need to follow up for several more reasons, because let's say that you emailed a quote to someone, like I do every day. I don't know if that email gets to them or not. A good way that you can take that out of that is when you send an email that you want to make sure it gets to the customer, is in the subject line and say, please acknowledge, and then finish out the subject. That is encouraging the customer to say, I got it, and then you'll know and you can rest. That's a little pushy, though, when you're asking someone to do something, when you're really trying to be nice and get them to do it. So when I send a quote out, if I don't get a reply the next day, within 24 hours, I automatically send I forward a copy of that same quote, and then I'll say, please acknowledge, I just want to make sure you got our quote, and do you have any questions? People don't mind you doing that. And then you'll find out, you'll get it back. People say, yeah, I'm ready to order, Steve. Or, yeah, I've got a few questions. Or, yes, I have it, but I need to think about it a few days. Or, sorry, your price was too high and I've already bought from someone else. But at least you know. It helps you find out. Don't take for granted that because someone gave you the opportunity to quote, that you don't need to follow up on it. Okay? There's an urgency in the world today. People are in a hurry. They're fast and impulsive. And I want to tell you that if you're not answering your email on a regular basis, every day, every morning, then there's a good chance as you get into business and get a lot of business coming to you, you'll lose a lot of business because people will not wait. They'll give you some time, but they expect an answer to come right back if you are a good business person. Now, I mentioned to you earlier that I was talking to some people about doing some virtual assistants for me. And I had several good conversations with this person, and I was feeling really good about maybe we were going to be able to do some business. Things were looking real good. But I kept noticing that they were slow about answering my email. I had sent an email on Friday morning, and I didn't get a response to it till the following Tuesday. And that irked me. I didn't like that, because if I don't be doing business with someone that's looking after my personal interests and I'm paying them good, I expect to be somewhere close to the front of the line, or at least to have a working understanding. So I sent a second thing and to see if they answered the second one, because email can get lost. It can go to spam. It may not get there at all. Hadn't heard from the second one. And today I sent a third. Now, this is a lot of days after, so I'm at the feeling right now that this person has decided, one, they don't want to do business with me and just don't want to say so. I'd rather them just send them back and say, Steve, it just doesn't feel like a good fit. Maybe we can get together later and work things out. That would have been the professional thing to do. Or maybe they got a sick child and just hadn't had a chance to open email for a long time. If that's the case, I still can't let them off the hook to be my virtual assistant, because whether you're in the hospital or you're going back and forth and whatever, 4 or 5 days is long enough for someone to at least open their email up and have a form letter or form note that sends back, sorry, I got a medical emergency. I'll be in touch with you as soon as I can. Be polite enough not to make people sit there and wait and burn their candle. Because when they're burning their candle, they're not being happy, and they will not only not do business with you in the future, they won't give you a chance for future business. So realize that you need to return your phone calls. You need to answer your email right away. And I can talk to Sarita, who's on board with us now. We've been doing business now for about 2 or 3 years. Whenever I send Sarita an email about doing a task for me, generally I'll hear back from her within an hour, and at least within half a day. So Sarita, I congratulate you on your timeless. You stay on top of your business. All of us now have cell phones, or most of us do, and you want to be able to check your email on your cell phone and answer it. If you haven't learned how to do it, go ahead and do that, because it's really important. Text messaging is becoming so important, and I hate text messaging, but I'm getting 25% of my quote interest from people sending a text, and I'll answer it. Then maybe we'll talk on the phone later. So you don't need a cell phone related to your business so people can send text messages to you, and you can answer them real quickly. If you're in business, you got to check that email and your text messages all the time. All the time. It's just part of the way the world works today. All right, Sales 404. The gorilla. The gorilla is the king of the jungle, him and the lion. They basically make up their own rules. And by God, they bend the rules every time they can to make a sale, to get their own way. And if you're going to be the king of the jungle, the big kahuna of the business, sometimes you're going to have to take that aggressive, assertive attitude as gorillas do to make your business work and to get folks to do what you need to do. Here's some basic rules in Sales 404. Never, ever tell everything you know. Now, I break that rule every time in these classes because I'm not trying to sell you guys anything. None of you can say I've tried to sell you anything, nor anyone in my past that's come to my classes. So I am telling you guys everything you know, because that's what I get paid for, to give you some heads-up secrets. So when you're talking with your customers, you tell them what they need to know. You tell them what they need to know to help you make a sale. And all of us are all about loving to talk and chit-chat from time to time, but you got to be careful now. If you give away some trade secrets, because buyers are real savvy now, they will take some little information you give them and go find out how to save money or beat your price or do a deal or do it themselves. So Every little tidbit of information has value. So sometimes we have to be closed-mouthed on the items that we share. Never itemize your quotation any more than you have to do. Because when you itemize like a bill of materials, like you're building a house or building this, or if you're baking a cake, you don't need to list down every ingredient on it, because you know what they do? They'll take that bill of materials and shop it on the internet with the computer like it is now. Folks can compare prices on everything from a brand new car to a boat to an airplane, just in a matter of seconds. But they can't do it if you don't give them the bill of materials or the recipe. So hold on, call that private. It's private for you. It's your secret ingredients. Always make a pitch, a proposal. Always make it special. Remember that when you're trying to sell something, every sale is important, and you want to not slough off on something being unimportant, because it is important no matter how big or small it is. So when you're making a proposal, before you get there, you make sure you understand and have in your own mind what you're going to say, what your prices are going to be, what your negotiating room is going to be. You want to have a really good comfort level with your presentation before you get there. So several of you mentioned even tonight that I don't have my bill of materials ready or my menu. Well, I'm picking on Penny a little bit because she's been doing this a while and becoming quite professional at it. It's good that you would look at each one of your products and have a sales pitch in your mind of, well, why this piece of jewelry is so special. It's got this gemstone here, it's especially tailored and made to look good, and the metal will last, and this kind of metal won't hurt your skin. And I put it together in a presentation or a group of other jewelry so that it really looks good if you wear the whole ensemble. Have your pitch ready and have your prices ready. Like this set would normally cost $75, but if you get it in the package, I can sell it to you for $50. So how about that? Or maybe I would say $59.99 and see if they wanted to offer me $50. Then that would be good. I'd have some negotiating room. But have your proposal ready. And you can do most of this with the way you present stuff at your website, the way you put your sale information up there. Never disclose important names. Never tell who your vendors are, who your subcontractors are, who your manufacturers are. I have a chance to talk with a lot of people that's getting their businesses started, and I'll ask those questions sometimes just for my own personal knowledge, because I am not going to be in competition with you. I ask those questions to see if you tell me, and when you do, I'll come back and say, no, I'm glad you told me that, but you don't need to tell anyone else. Keep your secret secret. That's what makes you special, and that's good. The more of them you have, the more powerful you are sometimes. Now, one of the greatest things that I want you to understand, and maybe you just haven't been here so that you don't, is that some people have a hard time to say, yes, I'll take it. Oh, boy, I want to buy that. I've been waiting so long. Yes, let me have it. Some people cannot say yes. Some people will really want something and save up their money for years or months and really want to buy it, but when it comes right down to that second, that particular second when you have to make the decision, they won't do it. Now, there is a lot of people that deal with this, especially with bigger ticket items. So I want you to pay attention to this. And I want you, maybe you have this little scenario that you want something for a long time, but then when it's time to do it, you have to wait a few minutes. Some people don't want to buy something so bad or say yes. They look like this little girl. I mean, it just tears them up internally. So as professional business people that's going to be doing selling for a long time, here's how you get past that. First, your work, your presentation needs to be a work of art. You need to have everything ready. You need to have it presentable, looking good. If you're in business to sell, you've got your presentation ready and you're ready to go. You already know what you're going to say, and if you get the order, you're going to be ready to say, and by the way, we've got this, or we can negotiate this point. Or if they're going to If you know they're probably going to make you a counter offer 2 or 3 times, you've got those negotiations ready. Your presentation being a work of art, including your presentation of yourself. You dress to impress, and you can overdress and underdress. So in the business world, you dress to impress. There's a fellow named Dr. F.A. Meisner that was around, died in 1815. Some of you have already answered your test. This is one of the test questions. Dr. Meisner was a great fellow, a smart fellow. He thought years ahead of his time. And he came along with the reason we got the word mesmerize is because of that doctrine. And I want to help you focus on mesmerizing right now, because it is a skill that will pay you dividends not only in closing sales, but also in negotiating different things. Let's think about the definitions and the synonyms of mesmerize. To spellbound, entrance, dazzle, bewitch, captivate, hypnotize. Those are powerful words, isn't it, when someone is mesmerized? I think about my children as I was coming along, and SpongeBob SquarePants, my grandchildren would sit in front of the TV and SpongeBob would be on, and they would be fixed on that. I mean, no matter what else was going on in the room or going around or what you'd say to them, their eyes were glued right there on SpongeBob. They were mesmerized by those cartoons. And sometimes we have musicians that do that, that know how to do that, and it's just important. Selling, when you get right down to that nitty-gritty at the end of the day, or at the end of the presentation, it's a work of art, and it's like a drama. It's like a drama. People play the roles. We've got a role to play, and we need to be ready. We need to have practiced our script so we know what we're going to say and when we're going to say it. A lot like a preacher that's giving a great sermon. He's well prepared. He knows exactly when he's going to make certain gestures and such as that, and he knows exactly when he's going to look and point, and that choir director knows exactly when he gives them a sign they're going to do a certain piece of music, and the pianist does too. So the music is all played in conjunction with the right time with the sermon, so every word will be as powerful as it can be. And that is so, so important. It boils down to, and the thought I want to leave you with tonight, it all boils down to, everything that we've done boils down to closing that deal with a customer. And there's a certain point that you'll remember, maybe if you've had children, that a young baby with colic or stomach problems will just cry and cry and cry. They just can't go to sleep. And we rock them and we roll them and we wear our hips out. And sometimes we even take them out in the car and drive around the block or two, because that would sometimes help ease them and they would go to sleep. But at some point in time, it might be 2 or 3 o'clock in the morning, and a number of hours later, or a shorter period of time, at some point in time, you look down in that little baby's eyes and they have that 3-pointed smile, and they'll be breathing and hollering at the top of their voice, but then all of a sudden, they go, and they relax. And they let the anxieties go, and they basically give up, close their eyes, and go to sleep. Well, that aha moment, like with that baby, that precious baby, you can find that aha moment with your customer when you're selling to them. Every important deal, especially if there's anxieties involved and it's a tough sale, a big sale or important sale for you, it is always important, because just like that baby, there's things that lead up to that aha moment. First of all, you have to win their trust, and they have to like you. You have finally, through your presentation, having everything ready, you've let them know that they want and need to buy from you. because you've got what they need and it's a good value and such as that, and you've taken the time to explain that. And you've talked about the price and the value and the extra value that you're bringing, and maybe you pulled out some secret weapons and talked about the great reputation of this product or the warranty on it. Whatever it took, you were trying to relieve those anxieties, because that's what's making that person not want to say, yes, I'll take it. They've got that anxiety that's built in there. And You will learn to lower your voice and to look them right straight in the eye, and to move your hands like this, and your head, you start moving your head like this as you're talking, and you will notice that in a few seconds they'll start moving their head like that too. And when you have that happen, I'm going to tell you that you will sense that it's time maybe to slow down your talk. Go through a silent period. And as you say things again, keep moving your head and moving your hands. And all of a sudden, you'll be able to reach out and shake hands and say, "You ready to do the deal? Let's shake on it." Or let's put our initial right here. And once they have started moving their eyes and their head in that way like that, or you feel like they have relieved, their anxieties are gone away, that's the aha moment. And that's the time they're breathing easy, and that's the time they're ready to buy. Sometimes salespeople will keep on talking and talk themselves out of deals. You have to look for that buying moment and those nonverbal communications to be the best salesman that you can be. Because when you master that and you practice at it, you will get really good and better and better and better. And it works not only with selling stuff, it works when you're presenting a position and a negotiation. It's really true that to close the deal, we have to help the customer get rid of those anxieties. We have to convince the customer that we're here to stay, that we're trustworthy, and we use our testimonials and our videos to get there. And without it, you're at the disadvantage for anyone that is. So let's all remember, y'all have done really well the past 7 weeks. I'm so proud of you. I'll tell you again, we're going to do the same thing tomorrow night if you want to come back. But it's not how many times you get knocked down that counts. It's how well we get back up and how determined we are to win this race. That's what the Academy of Entrepreneurs and Associates is about, is encouraging people to be the best people they can be and to win the race, because that's how you win in entrepreneurship, is by staying in the game at your own pace that you're comfortable with and moving forward. Statement of values: respect every person, maintain high standards, earn trust, foster partnerships, and embrace excellence. These are mine, and I invite you to take them and use them as your own in your value statements. Do it. So congratulations again. Be the best person you could be. Hold your candle up high so you can see the way and to invite people to come with you. Now remember, we're going to take a break now on Wednesday nights. Next week, we're going to be take a break, and then we're going to be over at James Brunt on a Wednesday night. I want everybody to come that can. Meet and greet each other. One night won't hurt you. Seminars are good. Be the same type of presentation we do here. But to see you guys would just be great. I'd love to see you. And maybe we'll have some certificates ready if Sarita and I can work that out. And then the following week, we'll start out with 5 more Wednesday nights online and deep diving into subjects. So thank you for your presence tonight. I'm going to turn the mics back on. I'd like to hear from anyone that's got anything they'd like to share.
In the supply chain, all those kind of things. So, yeah, that's what you're going to learn from this.
Hey, Edna, how are you doing? I hear somebody there.
Great class tonight, Steve.
Well, thank you, Sarita. I appreciate it. I'm looking forward to getting some names to you, and we'll get some certificates made. That'd be cool, won't it?
Yep, sound like a plan.
Yeah, that's great. So with some of you Dublin County folks and Sampson, that's not too far from Kenansville, be able to come over to the seminar?
Hey Steve, this is Amanda. I'll plan on going.
That'd be great. Sure would love to see you over there. Look forward to meeting you.
Yeah, I'll be over there, Joe.
Okay, Joseph, that'd be great. That'd be great. Any questions from anyone? What did you think of that sales presentation? You ready to close the deal?
That's really good.
Good. Well, that's everything there works. It works. It makes a difference. I get kind of excited when I get to talking about the things that people do to turn people off with the everything from the smell to the politics and all that stuff. It's just amazing how some people will just turn off other folks trying to sell to them. All right. Well, I'd love to hear from you. Send me emails. Look forward to working with you. If you'd like this same program tomorrow night, join us again. A lot of you are doing both nights, and I'd love to see you. So God bless you all. Thank you for your attendance, and congratulations. Several of you have already done all the work, done all your homework, done the videos, and so you're already one of the associates in the academy. So congratulations. We'll be working on your certificates. All right. Good night, everyone. Take care.
Good night.
Good night.
Good night.
Good night.
Good night, John Boy.